could, if you want to mark this out, see this fair value gap. You could actually see price spike just above that. There's no gaps here, so maybe we'll go right to the top of this IFEG and then drop. So maybe I can push this higher to get a bit more value here. And now it's just a matter of sit and wait. Okay, so now we're in this trade. What we need to see is we want to see price reject to go lower here. Obviously, if you're a scalper, you would take your trade up here and target this low. And then obviously if you break this low, you move your stop to break even. And then you target these equal lows right here. Okay, let's see if we can hold price down here. Okay, now we want to see a nice push down. See what I said earlier, lower low, lower high, lower low, lower high, lower low. Want to see a deeper lower low to come back. So we might go in that trend down all the way to there. And at this point we cross this low here and we move our stop to break even. Let's make that a 5,000 Rand profit there. And here we can mark out that swing high there and come down here. So it could fill this whole gap all the way up to here before it goes down again, if it really wants. Okay, let's see if we can get this run down to this fair value gap. Okay, so price is currently in this little fair value gap. And we want to see price hold here. Remember, we can see price go out of it and just pin to it. That's just damage that's getting done. I mean, we could get stopped out here, which is fine, but this candle here, as long as the body closed within the fair value gap, I would like to see price going lower here. I mean, I don't see anything we could go back into this IFEG just to test it and then go lower. But let's see where this body of this candle closes. I'm leaving my stop where it is at this point. It's closing outside of that fair value gap, ultimately turn it into an IFEG, and which is obviously not ideal, but it is what it is, right? 50% of this little wick here is about here. So in theory, if I'm right with all of this, we should not get to my stop. If we want to go all the way up there, then so be it. But you know, ultimately I don't like price seeing, you know, form a fair value gap, invert against the trend that I'm actually going. And that's why I would rather collapse my trade when this has happened. If I had to enter here, because I entered up here, I'm happy to leave it there. If it wants to go stop me out, I'll still take away $300 there. And this is just to demonstrate, not about the money, to say you make $300, but Daniel, you lost some money earlier. It's how you manage your risk and not get anxious here and start moving your stop loss out. Rather leave it there. If you've got context to say price should go lower and it does something that you don't like this IFEG, I don't like that, I would have just collapsed my trade here. But because I'm up here, I think there's some other factors here that could hold price, you know, down, and possibly see this inverted fair value gap gets inverted again to go lower. And this could be that swing high which we spoke about, higher high, lower high, lower high, and now this low should be the target. And then these equal lows should be the first target. If we can break through that first fair value gap, then I believe we can go all the way down here. And these lower highs, this is your trend line for trend line traders. At some point we will run all of those for liquidity. So maybe I'm a bit ambitious to take it all the way down here, but I think it's there's a chance, and the probability, I mean, it looks like, but I want to see what's happening here. If we bounce here, I'll most probably just collapse the trade, but if we smoke through it and close below this first fair value gap, then I think we could get there. So our price is stuck in that IFVG, or that fair value gap. I still think we're going to push lower. Alright, let's see if we can get that expansion down. Be a nice trade though. I guess this is part of trading, right? To be patient as hell. Especially if you get some nice moves. And I mean, if you look at this market inverts, contest it and move lower, that's perfect. But it's also even more perfect if you get those moves that go straight to liquidity and you done and dusted for the trade and you look for the next opportunity. But the minute you get this and you get this bloody sideways move, that is just testing you on a different level. And I guess that's when most people are starting to get scared, starting to doubt whether they're in the right direction and start seeing some other stuff. And yeah, so I think at the end of the day, what is important is to have a predefined setups and price action that you feel comfortable with, and say, all right, if this happens, this is what should happen. Then you're only going to know this if you journal these things and you've seen it a million times. And then stick to the plan, I guess, not deviate from it and try to change what's working. Fair value gaps, IFVGs, liquidity, the way I see it, the way I trade it, it works for me. I'll sometimes take trades and it won't work out, but it's because that's part of my process. Look, I'm not perfect in trading, and that's why I've got a channel to obviously learn, and obviously to share with you guys the way I trade it and the way I learn. And as we do it every day, we get better, because the more you see it, the more you read it, the more you mark it out. And I've said it before, it's easy to look at a chart after the fact, to mark it all out and say this is what it was. It's completely different to sit in front of a live market to mark it out and say this is what I want to see happen. If it happens, great, then I'll take the trade. If it does something that I don't like, I mean, rather take your loss. If it works out, it works out. But if you've seen it a lot and you've learned from it, you'll know when to cut your losses and move on to the next opportunity. Also note, it's end of day type of thing. So yesterday I left earlier and I said, probably see a nice move at the end. After I end my stream, I did that. I came back 5 minutes later, I saw a nice setup, but unfortunately we didn't take it. I wasn't live, I didn't take it either, and I think going forward I'll trade the PM every day, and I'll stick around longer and not just till 3 o'clock, but maybe till 4 o'clock, around there. But I do think we get to a time now, I think 10-2, where it becomes very volatile and we can see price move unexpected directions. Not every day, or if you're in the right direction, you can see a nice quick move into your profits. I was hoping with the momentum we saw here that we'll see the move much quicker, but obviously as soon as you take the trade, start having a mind of its own. Slow grinding move, and we must see a nice aggressive push into these equal lows here, and the reason I say that is normally if you got liquidity marked out and price get close to it, it tends to move through it quite quickly and reject it, or then continue from there. It's also important not to trail your stop too aggressively, where if we look at these highs here, it could be fairly equal as liquidity. If I move it there now, we could see a spike into it and then continue lower. I want to see what happens here before I move anything. Okay, if we can close like that, it'd be nice. That would suggest we're going lower. It's important to note that this IFEG, see how this tail of this black candle pin right into that 50% and reject, which is good. If we break this low, I'm going to move my stop to the top end of this IFEG. If we want to see this high holds, we need to see price take out this low in order to follow the pattern where it's lower lows, lower highs, lower lows, lower highs, lower lows. But the minute we start taking those lower highs out, then good, I have a stop at a profit level which will protect me from losing more capital. Okay, the body is still in the IFEG, and then you see some sort of a big reaction there, and this is the time where we see price. This is a macro, it's I think the last macro of the day, which is 1550 till just after 4. The key, guys, is to take this low out. If we're not taking that out, it's good. Quite easy, turn around and run up the page. Now I want to see price smash through this first fair value gap, then I'm going to hold for that $8,000 and see. Not yet at our 19,460 first target that we put out earlier. Alright, first target hit. Now let's see where we're going from here. Okay, so we're bouncing from there, so now could see price come up the page, make a higher high and then a lower high, or take these liquidities out and then drop, or we can see price close below it and run down lower into this level here, because there's liquidity down here as well. Reason I move it here is when you enter up here, you would have moved it to break even here, so that's a sensible place to leave it. Want to get stopped out here, I guess. I mean, if I took the trade here, I would have taken profit down here, but I'm going to try and push for this target down here. If I'm wrong, obviously I'm giving most of my profits back, still walk away with $2,000, but let's just give it some time. So I would like to see this liquidity get taken first before we go up to these highs here. Because of that, I'm just going to secure $4,000 there. I know it's at the bottom of nice fair value gap here. I would like to see us going lower, taking this low out from here. Okay, and that is it, guys. That is how you find a nice trade. We gave a bit of profit away earlier, but this trade actually played out very nicely, and we call it live, we call it ahead of time, and we managed to trade all the way down there. There's definitely places where you could have taken partials, but I decided, looking at my situation on liquidity, I thought that's where we would want to go, and we target there that liquidity. I obviously would like to see this fair value gap get filled even more, but be as it may, we got our profits, and it was absolutely great hanging with you guys.